Assalamu Alaikum everyone, welcome back to another video. In today's video I'm going to do a very quick one and look at a company called Nvidia. Nvidia has been on my short list for a very long time. I used to own stock or two very long time ago, sold it, probably regret it. I want to basically look at it today again, talk about what the company does first, then we're going to look at the financials and then see if this company is a buy at the moment, and maybe we could add it to our short list and hopefully initiate a buy very soon. So that's what we're going to do. Nvidia, as you can see, is currently $609 billion company. I have no doubt this company will be a $1 trillion company probably in the next 4 to 5 years. The company operates as a visual computing company worldwide. It operates in two segments, graphics and computing networks. The graphics includes the GeForce, the GPUs for gaming and PC and so on. Now the company is involved in a lot of things, including data, including things like the automation, for example, AI, you name it, they are involved. Okay, and I'm going to show you one of their reports here. Okay, so let me just go to the top again. So in terms of, I'm not going to look at this data because they are reporting their earnings on basically next month. So hopefully by then we will, hopefully if it goes down then to the where I want it to be, I will definitely be buying some of these, maybe a couple of stocks of this company. But right now we're just going to look at the data and then see, but I'm not going to focus on more on this data because this is last quarter. But as you can see here, they're involved in gaming, they're involved in data centers, which is again, so the gaming revenue is actually going up, in the data it's going up, the professional visualization is also going up, automotive is going up, and this and then there's a couple of other things as well. I'll show you in a second. So if we keep scrolling down, and you will see basically the type of product they make. So the GeForce RTX is basically one of their GPU as is for computing. In terms for gamers, I'm sure if you are a gamer you will know what I'm talking about here. In terms of, so they've got a lot of products, some which I've actually have no idea, but they've got things like enterprise AI. They have the apparently fleet command, I don't know what that does. They do have a Nvidia, what is this command, subscription offering, providing interface with a fast path to production of AI. So again, they're involved in the AI side of things. Again, basically powers world's fastest and greenest AI supercomputers, which is very nice to hear. They have so many different products. Okay, and one of the things that I want to show you is this part here. So if we focus on just the history of the company, it's basically starting in 1999. Okay, and then you can see their markets in terms of gaming, data, professional visualization, and auto, and then so on. You can see is basically their revenue is absolutely going up every single year. Then when you look at it from where they were, okay, from chip vendors to a basic computing platform, now they're involved in gaming, HPCs, for example, AI, healthcare, transportation. They are in almost everything. So in terms of gaming, AI, 3D designs, self-driving cars, this is the future. Okay, this is why I really like this company, because from gaming to AI, 3D and self-driving cars, this is the future. This is where we're headed, and this is one of the companies that are involved on the forefront, and this is why I think they will be a $1 trillion company very, very soon. Now they are better than any other company out there that produces similar sort of things. So gaming, for example, data centers and all that. So you can see their revenues are actually going up every single year. Okay, for the last 5 years. So if you look at the revenue from 7.7, so that's basically a CAGR of 22%, 82%, 7%, and 11%. That's brilliant. Like, and this is probably why this company is currently has a PE of almost 87 or almost 88 at the moment, and that's very, very high, and they pay very small dividend. And when you look at their EPS, okay, the reason for this is because a lot of people are actually betting on the company and know where the company is heading, and they know what it can produce, and therefore they're willing to pay extra. And this is the danger. Like, it's a great company, but the valuation is very high, and this is one of the things that I want to focus on today. Let's look at the analyst on what they're saying for the next couple of years. So currently, next quarter about 40%, next basically current year is 65%, and then 13%, and then next basically 5 years 32% every single year. That's the growth side of things. That's really good. 32%, if you can get that 32% every single year for the next couple of years, I mean next 5 years, that's absolutely brilliant. That is massive return. So now we're going to look at the valuations and see if this company is actually fair valued. So if you can see here, it was closed yesterday $244 per share. It's 77 basically percent premium. Okay, basically according to Morningstar. When we look at tip rank, okay, it's 241, and again that's downside of about 1%. So it's still expensive. And when we look at Yahoo Finance, for example, it's 233, currently 244. So it is really expensive right now. And one of the things I want to look at is financials for the last couple of years. So if you look at this, is 9.7 to 11 to then 10 because of 2020. I don't really know why that happened in 2020. Maybe it was early 2020. But then again, it bounced back quickly and is now 16.6 billion. A lot of this, right, 21.8, almost 22 billion, must be a lot to do with the fact that we were all locked away playing games and basically using technologies. I don't think that's sustainable. Okay, so we'll see how that goes. And again, to get about almost the $14 billion of gross profit, that's absolutely huge. Let's have a look at their net income out of that. So $7 billion, really, really good. I mean, I'm looking at this for the first time in age, but I'm not really surprised at all. So 11.2, 13.2, 17, and then 18. So that's the basically assets are growing. Their current liability asset is $16 billion. Current liabilities are only $4 billion. So they've got plenty of money in the bank, and the shares, I'm sure they're buying back their shares. No, actually they issued more shares last year, but they bought back again this year. So they issued, maybe they needed a little bit of money maybe in 2020 because of COVID and situations like that. But yeah, they issued more, but then they bought back again. It's not as, they are actually diluting their shares, but it's not as bad as the other companies really out there. And then when we look at their free cash flow, they got $6.6 billion. And the ridiculous thing about this company is this dividend, 0.07% dividend. You might as well stop paying it because it makes absolutely no sense to actually do that. The next thing we're going to look at their statistics, PEG ratio, again, 3.41. That's huge. Next, forward PE of 48. That's expensive. Okay, but when you look at the margins, profit margin of 32, operating margins of 33, and then return on assets and return on equity, again double digits, absolutely 40%. That's huge. So the company is great. It has a great product. It's in the right basically industry, but the stock itself is right now really overvalued. The other company that I want to show you, the other thing is this Simply Wall Street, and as you can see is overvalued 111%. They are saying fair value should be $115, but right now it's actually $244 per share. So I really, the moral of the story is I really genuinely like this company, and I know, you know, some of you probably own. If you own this stock, can you let me know? Just put on the comment and just tell me what your you don't actually need to tell me your average cost, but it will be interesting to know how many people actually own this stock, because I really genuinely like this company. But over the last couple of months, but almost a year now, I've been looking at it. I had one share and then it literally shoot up, and then I think it was a 1.1 shares or something. That was early 2020, and then I've sold it straight away because I thought I'm not going to buy more of this because it's actually overvalued, and I just can't keep one share. I should have kept it maybe after the split, and maybe I would have had a little bit, but anyway, either way, I made a small profit and sold it. So great company in the right industry. Everything you see here is heading the right directions from, and the companies that they work with. In fact, I want to show you one last thing before I stop the video, and it's data center. So data center from 2017, okay, looking at them in the millions, and now $6.696 billion. Okay, so that is in the space of 4 years, okay, 5 years. Look at where it is right now. And they have, all of these companies use their basically products that this company creates. So every single one of these platforms, okay, whether it's the Amazon web services and or the basically Azure or whatever, Google cloud platforms and IBM cloud and so Oracles and so on, they all have some sort of a chip or some sort of a product that was created by Nvidia. And as you can see, Nvidia shares of the top 500 systems is growing every single year. Okay. And the final thing, visualization, again, is the same thing. There's a lot of companies here that I've never heard of, but I'm sure they're involved in the visualization side of things, and every single one of these companies actually uses their product. Same goes for all, basically auto. Again, all of these cars basically are using the product that was created by this company. And finally, large and basically diverse customer base as well. So they have all of these companies that are using their products. And this is why I get excited, because they're not just relying on one or two companies. They rely on some of the biggest companies out there to actually use their product, and obviously that is a very, very good thing. And that's, I absolutely love that side of things. And I'm sure every time I do a basically video about technology company, I really get excited, because I know the technology side of things, and that's my specialty, and I absolutely love what this company is doing in that side of the world. And but yeah, anyway, I'm gonna stop the video there. I hope you enjoyed the video, and like I've said at the beginning, I really like the company. The valuation is very high. I'm waiting for the November 17th earnings report. Once that comes out, if it's a miss, then it might just go down to a fair value. At the moment, in fact, let me quickly show you Nvidia. I have got 181. So if it hits about $181 per share, and then I'm buying. But that's 42% drop, which I don't think that will happen. But we'll see. We'll see. If it happens, I can't say it is never going to happen, but if it happens, then I'm definitely going to initiate a buy. Obviously they do pay small dividend, and according to Simply Safe dividend is actually very, very safe. Their dividend, again, it's very small, like 0.07. Who does that? That's crazy. I thought Apple was bad, but this company is even worse. Right, let me stop the video there. I hope you enjoyed. If you enjoyed this kind of content, please like, subscribe, let me know what you think. If you own shares of this company, again, let me know in the comment section. If you don't mind sharing, just let me know how much you actually bought it initially, and if you're making money on this, perfect, well done to you. And just, I will honestly, if I own a share of this company, I don't even want to sell it. Even if it goes I don't know, like triples my money, I would still keep it, because I genuinely believe the company is heading in the right direction, and they have absolutely amazing products and so on. Right, take care everybody. Assalamu Alaikum.